All right, let's begin the show. And among the many tax proposals in this year's budget impacting investment securities is a proposal to tax a hitherto tax-free proportion of income distributed by real estate investment trusts or REITs. What will be the impact of this proposal, and should you continue to invest in REITs? Let's welcome on board Prasad Sawant, Head of Advisory, IIFL Securities, to answer all of these questions. Prasad, good evening and welcome to the show. We will analyze the proposals announced in the budget pertaining to REITs. But before we get on to that, I want to understand the current tax implication that's involved under this investment instrument.
Yeah, good evening, everyone. Good evening, Kavita. So we need to understand in detail how these REITs used to distribute their incomes. First is through interest, secondly through a dividend, and lastly as a repayment of debt. So repayment of debt prior to this was not taxable, but in this year's budget, our finance minister has announced that from next financial year it is going to be under taxable income. So from here on, we may see some decrease in the yield because overall, if we see 37 to 47% of their distribution was through this particular source, that is repayment of debt. If anyone is going to get a bigger hit, is that our HNI and ultra HNI clients who used to take this opportunity to get maximum yield through this REITs investment. But now, since this option is not available, their overall post-tax yield is going to be reduced approximately by 1%. But at the same time, this is good opportunity for our retail investors. Why? Because we have seen that overall these REITs are offering as of now at discount from the tune of 10% to 21% from their NAVs. So our retail investors who actually can enter into these particular REITs as of now, and in next financial year it is going to be taxable for those who are like under 30% tax slab.
All right, so let's dissect this further. You are telling me that it becomes more attractive for an investor, because that's the point of view that we want to understand basically. So like for example, I go and take some unit in a particular REIT now. How is this change benefiting me and my exposure? Could you just explain this via an example?
Yeah, so if you are see, as of now, retail investors can invest there are three REITs listed, that is Embassy, Mindspace, and Brookfield REIT. All these are in the range of 250 to 350 per unit. So you can invest into these particular REITs, and after that, they repay their overall the distribution of income is through dividend, interest, and this repayment of debt. So if we see as far as Embassy REIT is concerned, in last financial year, the current financial year, they have approximately till now shared 6 to 7% as a distribution of income. Out of that, 2.5% is in the 2.5% is in the way of repayment of debt. So you being unit holder, you are not going to get the taxes to be paid against the repayment of debt since you are the retail investor. But in case of HNI investors who are under 30% tax slab, their yield would be hampered from here on, since their overall income is more than the overall taxable slabs. So being a retail investor, there should not be any worry about it.
Let me understand. So far, we just have three REITs in the market that investors can buy. These kind of announcements which were done in the budget, you think the industry would come ahead and launch more REITs, because there's clearly a lot of interest, but there are not enough investing options when it comes to REITs. Announcements like these would have discouraged or dampened the sentiments of the industry to come up with more REITs. Do you think that?
Not exactly, because India has a far way to go from here.
Okay.
Our economy is very stable, and we have really big space to cover in infrastructure space. REITs are like real estate investment trust, in which generally big institutions are getting in, and they would in future we will have more such listings. Why? Because these are related to our infrastructure development as well as our economical growth across the globe. So these kind of these kind of amendments, or say these kind of changes, won't hamper any such sentiments, and we would see more such REITs listing. As of now, only three are listed, but they are offering really good rate of return from the, like, since they are listing, they have offered 9 to 16% of returns till now, and we may see like good upside from here on. We are waiting for some positive news as well. We are waiting for Desh bill to be proposed and passed in our parliament, wherein we are expecting that over a period of time, the occupancy level in all these REITs would be would get good growth, and because of which we may see good upside in these listed REITs as well as upcoming REITs.
So far, why do you think the interest has been very cold from investors' side?
Sorry, interest is?
Why do you think the interest has been very cold from investors' side when it comes to investing in REIT? Why there is no
Yeah. So yeah, correct. So as of now, the interest is not there because the those who are entering into the market for returns above 15%, they won't get into this. Why? Because as of now, the current rate of return is 9 to 14% in the range of 9 to 14%. Once we get this Desh bill passed in the parliament, we may see good occupancy level, and this is being hampered especially because of COVID, because the overall their income is dependent on occupancy level. So unless and until their occupancy level is grown in coming months, there won't be a good movement in these listed REITs. So over a bit of time, say in next 2 to 3 quarters, we are expecting these occupancy levels will go up, and uh, we have given good targets, like for embassy REITs, which is currently trading at 321. We have given target of 410, so approximately upside of 30%. Then we have Mindspace and Brookfield. For both of them also, we have given targets about 20%. So definitely, I would recommend our retail investors to get into it, and for HNI investors, they can also get into it only with like lower post tax yield from here on.
Can REIT be something that can be tied up as your retirement investment tool?
Retirement investment tool, I don't think so, because like this won't give you regular returns. Though till now they have shared, say, 6 to 9% of distribution of income on a yearly basis. Those who want to get into these instruments for their retirement planning, they can just park, say, approximately 10 to 15% of their amount, 10 to 15% of their corpus, because over a bit of time, we may see good upside in their overall returns. But if they are expecting regular income through these REITs, then this is not suggested for those people who are looking at as they want to park their money for their retirement planning.
All right, Prasad, that will be all as far as REITs as an investment instrument is concerned, and the kind of budget announcement we heard on REITs. Thank you so much for joining in and
Thank you.
explaining it to our viewers. On that note, we'll take a quick break, and then